Thank you for all of your requests for this video. I know it's a longer video, so I've placed timestamps in both the description and comment section of this video so you can skip around. If you skip around, you won't hurt my feelings whatsoever. I just want to make sure you get the most out of this. In 2020, you may have taken a coronavirus hardship distribution from one of your retirement accounts. Could have been your 401k, it could have been your conventional IRA or other type of retirement assets. In 2020, you were told that you could take up to $100 grand of money out of these accounts penalty-free, 10% penalty-free. But you understood there's still tax consequences with taking the money out. And there's different ways to pay tax on this special type of distribution. That's what we're going to talk about in this video, as we lay out some examples that are directly from the IRS website of how you might go about reporting these type of distributions on your tax return and when you decide to pay tax on this. Good morning, everyone. My name is Mike the CPA, and welcome if you're brand new here to Money and Life TV. Our focus on this channel is to teach finances, investing, and taxes. You will get the most out of this video if you watch it from start to finish, because we're going to cover the rules first, and then we're going to look at some specific examples that will hopefully relate back to your situation. For simplification purposes for these examples, I've brought my cash with me right here that I'll be going over with you. Now, the examples we're going to be discussing are directly from the IRS website, but I'm going just to change the numbers using these $100 bills in my hand, just so I can visually explain how this works. Now, the document we're going to be looking at today is from the IRS. It is the IRS, it's Notice 2020-50, and it's titled Guidance for Coronavirus-Related Distributions and Loans from Retirement Plans under the CARES Act. The CARES Act is where this is coming from. Okay, let's look at some tax forms real quick before we go further into the video and discuss more of the rules. I think if we look at some of the tax forms, the rules are going to make more sense as we go about them. The 1040 Form 2020 is where all of this eventually ends up. All these numbers we're talking about. This is from, I've downloaded this from the IRS website. It's available now. I don't think this is in draft form anymore, so you can get this if you'd like to. But of course, if you use software, so this is going to be all built into the software you're using, like TurboTax or H&R Blocks or one of those free tax software packages you can use online. If we scroll down, now we're talking about retirement distributions here, right? There's two parts on this return I want to point out to you where you might see these coronavirus distributions end up. And when I say end up, this is the net final numbers will end up on this page, nowhere else. They end up here. 4A, line 4A, is IRA distributions. And 4A is the gross amount. So all the distributions you receive, the gross amount goes here. The taxable amount is listed here. Sometimes the taxable amount is the same as the gross amount. Other times it's not. Pensions and annuities is line 5A. The gross amount ends up here. The taxable amount ends up here. Sometimes it's the same as the gross amount. Sometimes it's not. Sometimes it's different. I wanted to point that out here so you know where to look. Because in the end, this is where these numbers are going to end up. If you have multiple 1099-Rs, which we're going to look at a 1099-R here in just a second, you're going to add them all up and the totals will be reflected here. So you might have multiple inputs here, or you might just have one. It depends on how many different distributions you took out during the course of 2020. That's going to affect this area of your return. Now, the way you start to begin to get numbers for this area of your return is from a form called a 1099-R. 1099-Rs are generally known for reporting retirement distributions. I know this says 2021, just ignore that. The form you're going to receive is going to show 2020 because this is just the newest version of the form the IRS has released. I can't find the 2020 form, but I think you guys get the idea. The gross amount of distributions you took will reflect here, and the taxable amount of those distributions will reflect here in box 2A. In normal circumstances, just ignore COVID for a second, guys. Ignore COVID distributions altogether. If just under a normal circumstance you took a retirement distribution from your 401k or IRA or got a retirement distribution from your pension, you would use this form and to fill out this area, which we just talked about a moment ago. But because of the CARES Act and the COVID distributions is declared as like a qualified disaster distribution, you're going to use this 1099-R, what you're seeing here, and you're going to use this form to help you fill out this worksheet, which we're going to discuss here later in the video. So the way this is going to flow, as you're going to see later in the video, is you're going to use the 1099-R for this is specifically for COVID distributions, okay? If it's a normal retirement distribution, you ignore what I'm about to tell you. But for a coronavirus related distribution, which is what this video is about, you're going to use this form. You're going to fill out this work paper, the 8915E, this form, and then the net final numbers from this form will come and flow to this area of your tax return. So you go from here to here to here. Okay, let's continue with the rules, and we're going to come back in the video later on and show some number examples. Okay, here we go. Tax reporting on coronavirus-related distributions. It says an eligible retirement plan must report the payment of a coronavirus-related distribution to a qualified individual, that would be you, on Form 1099-R. We're going to look at that in just a second. Distributions from pensions, annuities, retirement, or profit-sharing plans, IRAs, insurance, contracts, etc. There's a whole bunch of plans. This reporting is required even if the qualified individual recontributes the coronavirus-related distribution to the same eligible retirement plan in the same year. You were allowed to take the money out as long as under $100,000. And it was for a coronavirus hardship. But you were also allowed, if you change your mind, you're like, oh, I better not take this out of my retirement, you were allowed to recontribute that money. So that's what we're talking about. But regardless, if you took the money out and didn't recontribute, or if you took the money out and did recontribute in the same year, you're still going to get a 1099-R. They are legally required to issue you one. And when I mean they, I mean like your broker or whoever the custodian is of that retirement plan. It could be John Hancock. It could be Vanguard. Those are some common ones, Merrill Lynch, something like that. So the 1099-R is where you're going to get your retirement distributions reported. And this has always been this way. If you have a pension income, if you have 401k distributions, all of this always comes through on a 1099-R, and it's going to list the gross distribution amounts, what amount of that distribution is taxable, the code section, and all that good stuff. For this, I think the code's very important because the code determines whether or not you pay penalties or whether it's taxed normally or whatever it may be. So the IRS is saying in box 7, where it says codes, it's going to be I believe, I'm not 100% sure on this, but it sounds like it's going to be distribution code 2, which stands for early distribution, which it is for many people, because if they're under 59.5, that's what an early distribution is. But exceptions applies, and the exception, of course, is this CARES Act with the COVID hardship and things like that. Lastly, it says, however, a payer is also permitted to use distribution code 1, early distribution, no known exception in box 7 of Form 1099-R. The 1099-R, you're going to get this in the mail, probably going to come to you end of January, sometime early February, somewhere in there is when you'll receive this, and then you'll have the information you need to proceed forward on your tax return. If you have multiple retirement accounts, of course, then you're going to see multiple 1099-Rs if you've taken money out of different accounts. Here's where we start to really get into the nitty-gritty on the tax stuff. All right, so first the IRS comes out and they say the first 10% additional tax under this code section, including the 25% additional tax under the Section 72T6 for certain distributions from simple IRAs does not apply to any coronavirus-related distribution. The 10% penalty is waived. The IRS has it in writing right here. Second, a coronavirus-related distribution is permitted to be included in income ratably. Now, am I saying that right, guys? Is it ratably or ratably? I'm saying ratably, so correct me if I'm wrong. Over 3 years. So they're saying there's two ways you can treat this. There's two primary ways you can pay tax on this money. The first way is, one, you can have, let's say we took out our $300, right? From our 401k. We took out our $300. We can elect, and that word elect is very important here as we're going to talk about it more in a second. But if I want to, I can pay tax in its entirety on this $300 all at once in 2020 if I want to. Or I can say, I want to elect to pay tax on it over 3 years. If I pay tax on it over 3 years, I'm going to report $100 in 2020. In 2021's taxes, I'm going to report another $100. And in 2022's taxes, I'm going to report another $100. So those are the two primary ways to report income taxes on this. And you to choose what's best. If your income's really low, you've been laid off out of work, you don't have a lot of other income coming in, and you're at a very low tax rate due to that drop in income, it might make sense to pay tax on all of this in the first year. Because if your overall income is lower, it means you're going to pay a lower tax rate on all of that money. Versus if your income in other years, let's say you spread out this money over 3 years, this tax, and if your income in those years is much higher, you're going to pay tax on this money at a higher rate. So it just, for each person, you need to look at what your income is, what tax bracket you're in. I have videos on that. I mean, you can check out my 2020 tax update video on the federal tax brackets and see where you fall. For some of you, it might matter. For some of you, it really doesn't. You're going to be in the same bracket either way, but something to consider when determining how you want to go about paying taxes on these distributions. Lastly on this, or thirdly, a qualified individual is permitted to recontribute any portion of a coronavirus-related distribution that is eligible for a tax-free rollover treatment to an eligible retirement plan within the 3-year period, beginning on the day after the date on which the distribution was received, and the recontribution will be treated as if it were paid in a trustee to a trustee transfer to an eligible retirement plan. In regards to the recontribution, if that's your scenario, that's actually when things start to get complicated. At that point, there's actually a lot of discretion that needs to take place in terms of how you report this. But some plans will allow you to recontribute, to my understanding, but from what I've been reading, it almost sounds like you might not be able to recontribute depending upon what type of scenario your retirement plan offers. So you really need to work with your plan administrator on that. Your accountant's not going to know that. That's specifically a retirement custodian type of thing. So you need to talk to John Hancock. You need to talk to Vanguard. Whoever your retirement person is, that's who you need to talk to see if you can recontribute in the first place. Now, here's where the IRS talks about how to report this. They say there are 2 methods for a qualified individual, that's you, to include the taxable portion of a coronavirus-related distribution in income. A qualified individual who receives a coronavirus-related distribution is permitted to include the taxable portion of the distribution in income ratably over a 3-year period, which we talked about just a moment ago, that begins in the year of the distribution. It says alternatively, now this is what I mean by alternatively, we talked about this a little already. A qualified individual is permitted to elect out, so you can choose to elect out of the 3-year payback period and just pay it all in the same year. It says they can choose to elect out of the 3-year ratable income inclusion and include the entire amount of the taxable portion of the distribution and income in the year of the distribution. This election cannot be made or changed, very important, after the timely filing of the individual's federal income tax return, including extensions, for the year of the distribution. So you can't go beyond the filing requirement, including extensions, to elect out of this. All coronavirus-related distributions received in a taxable year must be treated consistently. Either all distributions must be included in income over a 3-year period, or all distributions must be included in income in the current year. And when they say current year, they mean for tax year 2020, which you're going to be filing that tax return soon. So you're going to choose one method. Either you do it over 3 years or you pay it all up front in 2020. Either way, you cannot go back on that decision. You have to follow that and be consistent with your presentation. All right, here we go. Example number 1. I'm pulling this from the IRS website here, just like I mentioned, and I'm going to leave this handout for you guys, which is, you can find all this on their website, but I know it's tricky to find. So I'm going to leave this PDF in a Dropbox link. I should be able to, and you can download this for yourself. I'm sorry if I don't cover your specific circumstances. I just can't cover them all. There's just too many. It's too time consuming. But there are the most common ones I'm going to cover here today. But if you download this and read it, you probably will find your circumstances. For the first one we're going to cover is the most basic, where it says taxpayer A receives a $30,000 distribution. So instead of $30,000, we're saying $300. From his or her IRA on October 1st of 2020. Taxpayer A is a qualified individual and elects to treat the distribution as a coronavirus-related distribution. Taxpayer A uses the 3-year ratable income inclusion for the $300. Taxpayer A should include $100 in income with respect to the coronavirus-related distributions on each of the individual's 2020, 2021, and 2022 federal income taxes return. So all we're doing here is we're just reporting $100 each year, right? Very, very simple. And you notice nothing was recontributed. Let's walk through an example real quick using the numbers we've been talking about throughout the video, which is $300, right? Your 1099-R, of course, is going to show 2020 and not 2021 yet. It's going to show the retirement custodian up here, which I'm just, in this example, we're just pretending it's Vanguard Retirement Services. It's going to have your name, address, and all this down here, right? The gross distributions amount, and the total amount of distributions is going to be reported in box 1. If it's taxable, if any portion of that is taxable, that amount's going to be reported in box 2A. In this case, the total distributions and total taxable amount of distributions are exactly the same. The total distribution box over here, what that means is if this box is checked on your 1099-R, it means all the money from that retirement account has been pulled out. This is assuming we still have money left over in this account. And if you still have money left over in your retirement account, this box will not be checked. The other box I want to draw your attention to is 7. 7 is going to show the distribution code. We believe it's going to show distribution code 2 based on the IRS notice 2020-50 earlier in the video. And if this is an IRA account or a SEP or simple, it's going to have this checkbox right here. And that's going to be how you know if it's an IRA or not. If this is not checked, then you're going to know it's not an IRA or SEP or simple type of retirement plan. And that's going to help you fill out Form 8915E, which is what we're going to look at next. If you did have withholdings taken out of this account, they would show up here. And the withholdings for Fed or state or both are going to help offset any taxes you have to pay on these distributions or your other forms of income on your return. But for this example, we're just using these numbers, and this is all we're going with. Okay, continuing with our example now on Form 8915-E, Qualified 2020 Disaster Retirement Plan Distributions and Repayments. Super long name, right? In this top of the form, you're going to put your name, your address, and all that stuff. So we're just going to skip on by that. And notice that this is in draft form. The IRS has not finalized this yet. But usually once it's in draft form, not much, if anything, changes. Just FYI. So let's continue down the line here. Part 1. It says total distributions from, I know this is kind of hard to read, guys, so I'm sorry. Total distributions from all retirement plans, including IRAs. All the distributions you took out during the year are going to be first reported in Part 1. Now, the only reason you have to fill this out is because you took a qualified disaster distribution. And in 2020, that's the coronavirus-related distribution. If there was no disaster distribution, you wouldn't have to fill this form out at all. You would not even have to look at this. But because there's these special distributions, that's why we're looking at this year. Line 1 is distributions from retirement plans other than IRAs. We know that our 1099-R is from an IRA because this box is checked right here. That's how we know. So we're skipping line 1 and we're going right down the line 2. Distributions from traditional SEP and simple IRAs is $300 just from our 1099-R we looked at. Now, this example is assuming we just have one retirement distribution and it's for COVID and that's it. We're not going to overly complicate this. Some people might have normal retirement distributions on top of these COVID distributions. It just depends. But to keep things simple, we're just keeping it with one example. Line 3 is if you have distributions from Roth IRAs, which we don't. Line 4 is just adding up the totals from these different columns. Total for column A is $300. Total for column B is $300. And of course, we're saying that the qualified disaster distribution is the same amount as the total gross distribution, right? Column C is pretty tricky. It does not apply to this example. It really comes into play when you start to have excess distributions over $100,000, which we don't here. So we're just going to ignore that for this example. I've already decided that I'm going to publish another video that covers just this form, probably in my next video, because there's just too much to cover here. There's way too much information to cover, and I don't want to make this an hour-long video, and I just don't have the time to make it an hour-long video. So look for that coming up. Look for that video on the 8915E in more depth coming up. Line 5, it says if you fill out if you completed anything in column C, then you got to look at that. But since we didn't, we're going to skip on down. It says, otherwise, enter the excess of the amount on line 4, column A, over the amount on line 4, column B. These numbers are exactly the same. So if we subtract one from the other, it comes out to be 0. So line 5 is 0. Let's move on down now. Part 2 is if you have qualified disaster distributions from retirement plans other than IRAs. We have an IRA, right? So we're not going to fill this out. We're going to skip right down to part 3. Part 3, qualified 2020 disaster distributions from traditional SEP, simple IRAs, and Roth IRAs. That's us right here. It says on line 12, and for this example, I'm going to assume no, but it says for line 12, did you receive a qualified 2020 disaster distribution from an IRA, SEP, simple, Roth IRA, blah, blah, blah? Is it required to be reported on 2020 Form 8606? If no, I'm just assuming no, because that's the example we're going with. I'm going to mark no. So we're going to skip lines 13, 14, and go straight to line 15. If your situation involves this form, then you would mark yes. And then you would start with 13 and move on down the line from there. But for us, we're going to mark no, and we're going to go right to line 15. And I know because of these darn watermarks behind this that it's hard to read, guys, so I apologize. It says, if you completed line 2, column C, enter that amount, which we did not. Otherwise, enter the amount from line 2, column B, if any. Don't include on line 15 any amounts reported on 2020 Form 8606. Column 2B was this $300. That's what we're looking at here. I'm going to put $300 right here on line 15. It says adds line 13, 14, and 15. So right away we know our total's $300 on line 16. This is where we get to talk about the 3-year inclusion method or paying it all in the same year. When we talked about elections earlier in the video, this is what I was talking about. It says, line 17, if you elect not to spread the taxable amount over 3 years, check this box. If you want to pay all the tax at once, you would check this box right here. If you want to pay the tax over 3 years on this money, then you would not check this at all. Just leave this blank. It does say you must check this box if you check the box on line 9. So a box line 9, if you checked it here, you also have to check it here if that applies to you. But for our example here, it doesn't apply. It says otherwise divide line 16 by 3. So we're not electing to report all this at once. So we're just going to take 300 divided by 3, which is $100 per year, right? That's what we've been talking about in our example, and that's what the example showed here a moment ago. Line 18 is if you repaid anything. If you repaid any portion of this, you would put the amounts here. For this example, we're saying no, we did not, so 0. Line 19, it says amount subject to tax in 2020. Subtract line 18 from 17, which it just comes out to be $100 because anything minus 0 is going to be 0. It says include this amount in the total on 2020 Form 1040 on line 4B. Okay, so there's our $100. And now, like I said earlier in the video, this $100 gets transferred to the 1040 on lines 4A, and that the taxable amount is 4B. Whoops, sorry about that, guys. I think I misspoke. So line 4A, I actually expect that to show as $300, which is the total distributions, whereas the taxable amount of distributions on 4B is only $100. Sorry for the confusion. And that's where this ends up getting reported. So that's how it flows, guys. It goes from, like I said, it goes from here to filling out this form with your 1099-R, and eventually to the 1040 page 1 lines 4A and 4B. Although for your situation, you might be filling out 5A, 5B, or you might be filling out both. I don't know. It just depends on what type of distributions and what accounts you had during the year where those distributions were derived from. The thing to remember is that the grand total, regardless of how many different 1099-Rs you received, regardless of how much you took out versus how much is taxable, the grand totals of everything added up combined is going to be reflected in boxes 4A and 4B and 5A and 5B if it deals with distributions from retirement accounts. This is where it all ends up. Real quickly, if we had elected out of this income inclusion method over 3 years, and we just wanted to pay all the tax on all that income all at once, we would just check this box. We would not divide this by 3. Instead, we would just show the full amount of $300 here. This would carry on down to line 19. And then on our 1040 form, we would then report the $300 as the gross amount and also $300 as a taxable amount, and you would be done with this. At this point, I'm going to cover some of the rules on recontributions and some of the guidance from the IRS publication, or the IRS Notice 2020-50. I don't have any tax form examples in this video for recontributions. I know we covered it briefly earlier in the video, but I will cover that in an upcoming video that covers more in depth the 8915-E. So look for that in the next video if you're someone who has recontributed to these different plans. So that last example, or those last two examples, was really looking at an example where you did not recontribute any money back into those retirement plans at any point over a 3-year period or during the current period. Okay, nothing was recontributed. Now it gets a little bit more complicated. Now let's look at some examples where we do at some point recontribute money and see what that looks like. Let's read the rules real quick, and then we'll look at a couple examples, and then I'm going to wrap this up. Okay, it says tax treatment. I'm looking right here at D. It says tax treatment of recontributions of a coronavirus-related distribution made to a taxpayer who uses the 1-year income inclusion method. So if we report it all in 1 year versus spread it out over 3. It says if a qualified individual elects to include all coronavirus-related distributions received in a year in gross income for that year, and recontributes any portion of the coronavirus-related distributions to an eligible retirement plan at any time during the 3-year recontribution period. So, because you can report all of the income in 2020, but you still have 3 years, if your plan allows it, to recontribute that money back. So that's where it can get kind of messy. But anytime during the 3-year recontribution period, then the amount of the recontribution will reduce the amount of the coronavirus-related distribution that is included in gross income for the year of the distribution. The qualified individual will report the amount of the recontribution on Form 8915-E, which will be filed with the individual's federal income tax return if applicable. If a qualified individual includes a coronavirus-related distribution in gross income in the year of the distribution and recontributes the distribution to an eligible retirement plan after the timely filing of the individual's federal income tax return for the year of the distribution, that is after the due date, including extensions, the individual you will need to file an amended federal income tax return for the year of the distribution. The qualified individual will need to file a revised Form 8915-E with his or her amended federal income tax return to report the amount of the recontribution and should reduce his or her gross income by the amount of the recontribution, but not in an amount exceeding the amount of the coronavirus-related distribution. But in a nutshell, think of it like this. So if you take money out in 2020 and you decide you're going to pay tax on all that money at once, and you also decide in 2020 to recontribute part of that money, then whatever amount you recontributed is going to help reduce the amount you have to show on your taxes. So if I'm going to report on my 1040 form, if I'm going to show it all at once, like the full $300, but I recontribute, $200 of this, then I should only pay tax on $100, right? So at the end of the day, I took out $300, but I put $200 back, all in the same year. So, and before the due date of my tax return for 2020, then I'm only going to show $100 here. So that's what it's going to do. It gets tricky though. Once you, what they're saying in a nutshell is, if I decide later on, so like, let's say in 2022, I decide, or any time after the due date of my 2020 return, including extensions, I decide, hey, I want to put that money back. So I put the money back, right? But now we're past the 2020 period. We're going to have to amend the tax return for 2020. So it's a little bit additional legwork to get it to where it's going to be, but that's what you would do. Oh, and just so you guys know, the recontributions, if you're including your income over a 3-year period versus all at once, it works in a similar fashion. But if you do want to do that, and there are examples in this PDF. In fact, all the examples that I found, I think the bulk of them are in pages 12 through 19 of this PDF. That's where they can be found. Let's walk through 2 more examples and then we're going to finalize this. I'm going to show you one example where we recontribute if we started off by reporting all of our income from our distributions in 1 year. And then I'm going to show you one example if we're using the 3-year inclusion method, but want to recontribute with that as well. So in this example, it says taxpayer B receives $45,000. Well, we know for our examples, for simplification, we're saying that everything's $300, right? So taxpayer B receives $300 distribution from 403B plan on November 1st of 2020. Taxpayer B is a qualified individual and treats the distribution as a coronavirus-related distribution. Okay, we got it. Taxpayer B receives no other coronavirus-related distribution from any eligible retirement plan. Taxpayer B recontributes the $300 to an IRA on March 31st of 2021. Is that before the filing due date for his tax return? Yes, because the 2020 return is scheduled to be due. The first initial filing before extensions is April 15th of 2021. They've recontributed the money before the filing date. Taxpayer B reports the recontribution on Form 8915-E, which we looked at a moment ago, and files the 2020 federal income tax return on April 10th, 2021. For taxpayer B, no portion of the coronavirus-related distribution is includable as income because the taxpayer, he was going to report all $300 in the first year, but he also recontributed all the money by the due date of the return. Therefore, it wipes out. No tax to be included because he put the money back. There's 2 other examples on here. I'm not going to cover these, but I want to show you that they're here. Same scenario, but just the timing of when they put the money back. This scenario, they file an extension, example 2. That's when they file an extension. It all works out the same, where he's got nothing to be included in income. In example 3, the red star where I put here, this is if you're looking at this and this is you, they would have to amend the returns. This shows that. So if there's, based on when they recontributed the money, they would have to amend it in this situation. There's 3 examples right here that explain different scenarios. I'm sure one of these should apply to you based on your circumstances. The last example we're going to look at today or walk through is if you're using the 3-year inclusion method and you recontribute money to the plan. It says, example 1, taxpayer D receives $300 from a Section 401k plan on December 1st, 2020. Taxpayer D is a qualified individual and treats the $300 distribution as a coronavirus-related distribution. Taxpayer D uses the 3-year ratable income inclusion method for the distribution, which means they're going to report it over 3 years. Taxpayer D makes one recontribution of $100 to the Section 401k plan on April 10th of 2022. Far into the future. Taxpayer D files a 2021 federal income tax return on April 15th of 2022 without the recontribution. Taxpayer D should include the $100 in income with respect to the coronavirus-related distribution on each of the taxpayer's 2020, 2021, and 2022 federal income tax return. However, as a result of the recontribution to the Section 401k plan, taxpayer D should include $100 in income with respect to the coronavirus-related distribution on the 2020 return, $0 in income with respect to the coronavirus-related distribution on the 2021 return, and once again report $100 in income with respect to the coronavirus-related distribution on the 2022 federal income tax return. You thought you were done with math class. You weren't. All these are like long word problems. Obviously, it's like reading a math textbook. Oh, look at that. My Amazon order shipped. Let me close that. So as you can see, this stuff can be fairly tricky, but I don't think it's overly complex. It really comes down to tracking how much you took out, how much you recontribute, but almost more importantly, when you recontribute the money. If the money is recontributed before the tax filing deadline, is it after the tax filing deadline? Those kind of things is going to impact how you report this on your tax return. There's a whole slew of examples for these different scenarios as well. This is on page 15 of 19 of the PDF for this, if you're using the 3-year inclusion method. There's one example, there's 2, and there's even further examples that go beyond this. Nonetheless, hopefully I've broken this information down for you so it's a lot easier to understand. I know it's a lot. It's like reading lots of word problems. You can find more information in the PDF, more examples, if I didn't cover your example in this video today. If I get enough requests, and I mean a lot, then I'll consider making an additional video regarding this topic. Hopefully you can walk away from this feeling more confident about how to approach this and at least what type of things to think about when you're looking at this. Because as long as you know the rules and conceptually how it should work, then the reporting side of it's not too complicated. I hope to see you guys down in the comments. Engage in the comments with your questions. I really do hope you found this helpful. If you did, please drop a like. Make sure to share this with family and friends. A lot of people I knew took coronavirus distributions, and they're hungry for this information. Subscribe for our weekly videos on finances, investing, and taxes. Have a wonderful week. Until then, live life uncaged, and I'll see you all in the next episode. Peace.